Good morning, Jags. This is Fahad. Today is Wednesday, October 7th. Let's get started. A quick look in the S&P futures before I talk about one stock. Watch the 3,400 level in the S&P, which is the round number. And yesterday's bearish engulfing candle after Trump tweet caused the market to pull back late in the session, but the futures have started to bounce back after another tweet late at night that perhaps he wants to renegotiate and do something about the $1,200 stimulus check. Important thing is that at this particular point, in my personal view, market has already baked in significant amount of recovery or significant amount of optimism related to what would happen if Biden were to win, given the large lead. So I think that the sell-off that we saw yesterday and the bounce back is simply a reflection of it doesn't really matter what kind of tweet is coming out because it's not really having an impact. And you can simply look down the watch list and you can see exactly what kind of stocks continue to respond sharply over the last several days, and that continues to be solar, infrastructure, construction, anything that benefits from any kind of large fiscal stimulus package. And so market has already made its a statement. So a short term, a very quick blip on the road is what happened last night, and then immediately we started to bounce back sharply. So now from a technical standpoint, if you look at the S&P futures, this 3,400 level is a major VOP resistance level. It's a major VOP resistance level. If we start to break out through that, I think we're heading then to new 52-week high. All right, and so keep an eye on that 3,400. Yesterday was a bearish engulfing. Today could be a bullish engulfing candle. So there's that on the S&P futures. Now, with that said, yesterday in webinar, I discussed this a stock called Sonova Energy, NOVA. I also showed this website, and I talked about how this company actually provides the service to install solar panels as well as battery packs in your homes. These are the states where the company operates in, and the more it expands to different states or even in the existing states, what's happening is this company continues to attach the business related to battery installations more and more to the business of solar installation in the existing states as well as in the new states that it continues to expand to. And so here is some of the pictures on their homepage and all of that. We discussed everything, all of that yesterday in the webinar. So why do I bring this up here? Is a discussion in webinars. You can see Sonova Energy, where the company posted a remarkable quarter with 32% revenue growth rate and everything. Interestingly, yesterday, while I was talking about this, Bank of America was hosting a meeting with the top management. And this morning, they're out with fresh new comments about this company, and they're quite positive. So the first thing they said was that management emphasized yesterday that they're seeing robust recovery in growth as well as continued dealer additions supporting growth well into 2021 with its guidance of 40% annual customer growth guidance. Keep in mind the last quarter that the company posted, the revenues were up 32% year over year. And the total customer count reached a record high of 91,600, and the storage attachment rate to solar business was 34%. Point is, whether you look at the customer growth or revenue growth or the attachment growth or really in any way possible, everything that the company posted for the second quarter was somewhere between 30 to 40%. Based on this note that came out this morning from Bank of America, Nova is looking at robust recovery and expecting 40% annual customer growth rate going forward well into 2021. And so this is above what the trend rate that the company has been posting. In the same note, Bank of America also talks about that they expect continued tailwind of a storage attachment without formally updating last reported storage attach rate on a new origination of 34% the second quarter. You can also see the attach rate was 15% in the third quarter of 2019, then an increase to 24% in the fourth quarter of 2019, then to 30% in the first quarter of 2020, rising further to 34% in the second quarter, And now, based on the commentary that's coming out, they could be doing as much as 40% going forward from here. So the blending of the solar and the battery business is working out pretty good, while the expansion opportunity remains everywhere, simply for the fact the company operates in only 10 or some states right now, and the opportunity to expand that is significant. So nice little bullish view from the company, from Bank of America after meeting with management. The support on this stock remains right around 26.50 if it pulls back further. So if you look at the previous breakout or the recent breakout that happened over here was in very heavy volume through 26.50. Any retest of that would be a buying opportunity in my view, and I expect after sideways consolidation, this is a bull flag essentially forming near 52-week high, and I would expect more upside all the way to $35 to $40 per share over time. Okay, that's Sonova, symbol NOVA. That's it from me. Jay?
Morning, Pod. So on Monday, you issued a trade idea in a specific footwear company. And today I'm adding a different footwear company to my watch list, and that would be Wolverine Worldwide, ticker WWW. If we look back at Q2, e-commerce sales were up 96%, and that was an increase from 17.5% in Q1. Brands like Morel, Saucony, Wolverine, and Cat all saw growth well over 100%. And in July, the company released a collection of running shoes under the Saucony brand, ranging from $140 up to $200. The collection generated some buzz, helped the brand pick up shelf space. Now fast forward to September 21st, KeyBank was out with a note bringing this collection up and highlighting the great fanfare it received, as well as the immediate sellouts it had. And they thought that the interest in the shoes was well above what Wolverine was planning, especially given that races were pretty much canceled for 2020. Now at that time, when they published the note, they said, the company's getting to restock these. They don't know how large that is, but nonetheless, there are some new colorways coming out for this collection, and they were going to keep an eye on it because regardless, it was going to be a tailwind for Q3 revenue. And then a few days later, on September 24th, they were already out with a note. Let me quickly just share an image with you. So they were out with a note and saying, okay, Saucony restocked this collection and they are already seeing sellouts, especially in the men's category. They highlight that the Saucony Endorphin Speed, which goes for $160, and that was released in July. That's already seeing, it's already out of stock in 73% of sizes after being restocked, just a few days ago. Additionally, they were finding out of stocks in Morel's Moab 2 collection in both women's and men's, while the Hydromock was also a hit. And the final point that they would make is that when they looked at their consumer data tracking at Dick's Sporting Goods, who happens to be a key retail partner for Wolverine, September numbers were essentially increasing week over week. At Dick's, you saw 42.8% growth for the weekend at 9/13. That then jumped to 48%, which then jumped to 49.6%. So ultimately, momentum, it looks to be continuing, and they were reiterating their street high revenue estimates for the company.
Yeah, so it seems to me that the recovery should be there. I mean, anytime when you're going to have basically the key products running out of stock, that has to be a positive read through for the stock itself as well as the quarter that's coming up. One thing we want to do on this particular case is that we want to keep an eye on any kind of specific channel checks before the next earnings come out. There's plenty of time between now and then, and a lot of the times the fashion statement can change very, very quickly with a single product launch, or a single week or 2 weeks could dramatically see major swings simply because the traffic was high because of holiday or whatnot at one time than the other time. So keep an eye on any specific channel checks. Purely speaking, technically speaking, I can tell you that above 28, there's a major air pocket with only minor resistance along the way at 30, but there's really not much of resistance all the way up to 32. So on a percentage basis, the distance between 28 to 32, is about 15%, which is a lot of ground to cover using call option if this thing starts to run. Also would be a play on any continued growth to value rotation. So I would love to see more channel checks on this one before the next earnings comes out, and that may give us a nice clue as to how to position into earnings. But interesting update. Chronicle.
Fahad. No immediate setups this morning, but RBC's deep dive into Department of Defense spending caught my attention. This is a 36-page note, but the main takeaway is that through September year to date, the value of DoD contracts awarded increased 48% on a year-over-year basis. The Air Force appears to be the largest spender, posting 39% of all awards in September. This is the entity that's, of course, responsible for both the GBSD and small diameter bomb contracts, which made up the majority of the $21 billion in awards for September. Meanwhile, both the Army and Navy also saw increased spending of 63% and 236% sequentially and respectively. And on the whole, RBC thinks that procurement as well as research, development, test, and evaluation segments will continue to get solid support for future growth despite a flattening budget environment. So basically, even though the overall pie isn't getting bigger, this particular slice is going to increase in size. If we look at RBC's latest power rankings, they have Lockheed Martin leading the pack, followed by Boeing, General Dynamics, Raytheon, and Northrop Grumman, all in the top 5. But the most impressive one over the past month has probably been Northrop, symbol NOC, given their GBSD win. RBC also upgraded Northrop Grumman to outperform from sector perform for this reason. So I guess nothing really substantial in terms of trade setups. In fact, a lot of these charts don't look like they're going to be breaking out anytime soon. Getting along these names and playing for a breakout has been sort of a widowmaker trade over the past year, but the overall message here from RBC is that the market concerns about flatlining defense budgets are being overblown because RDTE segments are still going to see moderately increased spending in 2021 and 2022, and even though these large contractors they sort of been forgotten lately. So even though the future growth doesn't look all that fantastic, it's not going to be terrible either, to the point where these stocks continue to sell off nonstop. So even though the charts of LMT, NOC look like they've been beaten down, I don't think there's a lot more downside to go. Maybe they can still drop about 5 to 10 more percent. But once that happens, I think that's going to present us with at least some range trading opportunities where we buy the bottom of the range and then sell at resistance rather than playing for a breakout.
And that was pretty much the question, basically, by one client in the webinar yesterday as well, who was looking for an entry in Northrop Grumman, and I said that, look, this thing has been range bound at best, with and the range is tightening, no question about it. But if you want to play the range, that makes a lot of sense. Buy in the low 300s, sell in the mid 300s. So that's about a 10% range that one can play ping pong against. But in terms of momentum, it's simply not here. And I think this may simply be described as the market is speaking out and saying, okay, we don't see we don't see Trump continuing the presidency after November elections. It's going to be Biden, and that means that over time those budgets are going to get cut. And I think that multiple continues to contract as a result. Nevertheless, you're right about this order book, because that's what Jay also discussed a couple of months ago on the homepage articles, where these contract awards, particularly for GBSD, are huge in nature. I mean, look at the September month, right? There may be some seasonality here, but still, look at this compared to the prior several years. This is huge increases, but it's simply not working as far as these stocks are concerned. multiples continues to contract. One of these days they will break out. I just don't know when that time will be, but for now, one can continue to play the range that's in front of us. All right, good stuff. Thank you everybody for joining, and I will see you in the chat room shortly.